Hi, welcome to chapter 3, apply what you know. And we have one question in this video. So, a hotel on the Canadian side of Niagara Falls is approached by the Great Deals Couponing Company to offer its rooms for half off during the slower winter season when the hotel currently averages an occupancy rate of 20% per night. The hotel's normal room rate is 200 Canadian per night. Great Deals Company states it will market and sell the coupons for a fee of 50% of the revenue generated by the sales. The remaining 50% of the coupon sales revenue will be remitted to hotel monthly. Help the hotel's revenue manager calculate the impact of agreeing to partnership with the Great Deals Coupon Company by completing the occupancy and RevPAR with coupon sales spreadsheet and answering the questions that follow. As usual, please stop the video here and try to solve all the questions in ABC and also fill out all the spreadsheet and come back. Now, I'm assuming hopefully you did some calculations and you already have some answers, but let's go over all of them. Now, first, let's try to understand what the question tells us. The Canadian company, the hotel, basically, their business is not very good. They only have a 20% occupancy. And coupon company approached them and they say, they are gonna offer half off. Basically, they are gonna sell it for 100 Canadian per night. In addition, they are charging 50% fee. So in reality, you are getting only $50. I mean, once again, this is kind of extreme example, but it might be beneficial to hotel. And let's calculate some of the things. The first one is, what will be the hotel's RevPAR per night if no coupons are sold? So this is the one here. Room availables is at the moment is 200 for the hotel. And if the coupon company not involves, the hotel can sell 40 rooms, which is the 20% of occupancy. And we're gonna do it with the no coupon. So basically, coupon room sold per night is going to be 0. So total room sold is 40, which is the occupancy is 20. Room revenue in the spreadsheet, two different calculation. One with the non-coupon, one with the coupon. Because the non-coupon is 40 rooms with the $200 Canadian is 8,000. There is no coupon rooms revenue because there is a 0. And total room revenue is 8,000. So RevPAR is going to be room revenue divided by hotel rooms available, which is 40. Okay, that's the first answer. Now, as usual, and also as a practice, let's do all of those, fill out all these things, and we can continue the answer. Now, first thing is total rooms sold per night is good. Okay, now non-coupon rooms is 40, right, each. And there are some examples. Basically, if the company, the coupon companies sells 10 room, 25 room, 50 room, and 100 rooms, there is a different scenarios. So total rooms going to be adding, if you can see here, basically non-coupon rooms plus the coupon room sold. As I told you before, you can just hold on to this bottom right corner and pull it. And it's going to add basically 100 plus 40, 50 plus 40, etc. Occupancy is, of course, room divided by rooms available for sale. If we can do the same thing here. And when there is 100 room sold by coupon company and 40 rooms by hotel themselves, occupancy increased to 70%. So non-coupon room revenue is going to be, of course, same because they always sell 40 rooms for 200 Canadian. And to do this question, the coupons room revenue, what happens is, if you click on it, we get the regular price is 200, right? And the company says we're gonna make a half off. Basically, they're gonna sell 100. So that's what the divided by 2 is, 100. But also, they keep 50% fee. So you can only get basically 25%, right? You got the 200 divided by 100 divided by 2, which is 50%. You got only $50. That's what this calculation is here. So if we do the same thing and pull this here all the way, you can get the coupon rooms revenues and also the total rooms revenues, same way, and finally the RevPAR. Okay, the next question was, what will be the hotel's RevPAR per night if coupon sales result in 100 redeemed coupon rooms per night, which is this one, and the RevPAR is going to be 65. Now, from hotel's perspective, actually it's a very good deal, right? The first thing is room revenues increased, RevPAR is increased. But next question asks, in addition to changes in RevPAR, what factors would you suggest as revenue manager consider prior to agreeing a partnership with the Great Deals coupon company? Now, there are many answers to that. I mean, you can come up with many things, but I'm going to focus on a few of them whenever I look at these things. First thing, because of this deal, the hotel's getting only $50 each room, right? Regular room is $200. They say they make it half off, so it's $100. They also get the 50% fee, so they only get $50. First question we need to ask, what about our room cost? If the room cost is, think about it, if it's less than $50, it could be okay. But if it's the $50 or more, so basically you don't make any money, right? So cost of selling each room, additional room relative to impacts on RevPAR is important. One other things you might want to consider, yes, we usually focus on the room revenue, we calculate the RevPAR, but there are many other parts of the hotels. It could be spa, restaurants, bars, and meeting space, etc. So any additional hotel revenue that might be generated by the additional room sales, we have to consider that as well. Not only focusing on $50, but that additional 100 rooms might bring much more revenue due to spending other parts of the hotel. However, one thing we have to consider, any impact of sale of this coupon will have the customers that already paid full price for their rooms. If you're a customer staying at the hotels, if you see that coupon, how are you going to react? Not only today, in the future as well. So that's the things you have to be careful with. Thank you for watching.